What's up, everybody? I'm Kevin Clayson, and today's video is gonna be spicy, okay? I'm gonna be sharing some stuff with you that you probably have not heard anywhere else, and man, you are not gonna wanna miss it. In fact, it's so spicy, I'm gonna say it in 2 more languages. It's muy caliente and it's sehr heiß. That was German. For those of you that don't know, you can tell it's German because it sounds like I'm angry. But interest rates are on the rise. Now, should real estate investors be scared? In this video, you're gonna learn what you need to do about high interest rates and how it could impact your real estate investments, okay? That's right. We're gonna talk about something that's been on a lot of people's minds. High interest rates. What am I gonna do? The interest rates are going up. Listen, a lot of people are wondering how they should react. Should they be scared? Should they be optimistic? We're here to give you the facts and tell you exactly what you need to know as an investor, and it may not be what you think. High interest rates are bad, right? Yeah, man, tell you what, man, government just want more money. You know, I kind of agree with Uncle Cletus, except he's also kind of wrong because I don't think it's really the government's job to tell you what you should pay in interest. In fact, it's not like they're making more money, but the reality is the current environment that we are in is such where we have to raise interest rates if we want to get inflation under control. So when it comes to the government, they're just trying to get inflation under control. At least they seem like they want to. But when the market is down and the prices drop, interest rates have to rise. When inflation is on the rise, interest rates have to go up. This can be challenging, but we're here to tell you that it isn't all doom and gloom. In fact, we want to share with you 3 reasons why investors should not be scared of high interest rates. Are you ready for it? Let's go. Okay, now I told you this video is gonna be spicy, right? We're gonna say some things that you may not expect. Now, here's what I want you to understand first of all. High interest rates are not high interest rates. Let's just cut to it, okay? Everybody's freaking out about the fact that, well, interest rates, they were like at 2%, and today they're at like 6. 2% and 6%, let me ask you a question. Who wouldn't have bought a home in 1971 with 14% interest? Would you have bought a home? Just imagine if you had the opportunity, knowing what you know now, right? If you were like Biff from Back to the Future 2 and you had like the sports almanac, but it was for real estate, wouldn't you go back to 1971 with your hoverboard? And wouldn't you invest in real estate even at 14%? Because look at what it's done. So when we look at high interest rates today, we think, oh my goodness, well, interest rates have gone up. What am I gonna do? I mean, it's so expensive. Listen, the reality is, if you can still buy real estate in terms of single-digit interest, back in the 70s, we saw double-digit interest. Go do a search for Time magazine covers during the 70s and 80s, during the Jimmy Carter presidency, even leading into the Reagan presidency. Go look at what interest rates were doing and what the economy was doing. Are you telling me you would not go back in your time machine and buy real estate then, knowing what it could be now? Imagine if you bought a home in 1971 in Silicon Valley, right? It probably would have been 50 grand, 70 grand. What would it be worth today? $2 million? So listen, when you see high interest rates, you have to get it out of your mind in terms of thinking, oh my goodness, the interest rate is high. Don't let it come as a barrier for you to come and do real estate, because high interest rates today are far from high interest rates. And knowing what you know about real estate and how it's performed, wouldn't you still be buying real estate today if you knew what the future looked like? My guess is yes. Now, reason number 2 that you need not worry about high interest rates is your high interest rate, quote unquote, may be so scary that you are stepping over dollars to pick up pennies. Now, let me tell you kind of what I mean by this. We have clients all the time that come and do real estate, and a lot of times we're having these phone calls with people on the front end as we're getting to know them and trying to help them get, you know, some information on whether or not they want to do real estate. And I get the question all the time. People will say, well, I mean, boy, I wish I would have invested, 6 months ago or a year ago when interest rates were lower. I don't know if I want to move forward today. And this is what I tell them. Look, even with the market maybe being a little uncertain, are you telling me that real estate's not going to appreciate over time? And I let them know, look, if you are scared of an extra 3% in interest. What is that? Maybe let's call it $150 a month on the homes that we do, and as far as your monthly payment, right? Are you not willing to pay an extra $150 or $200 a month, especially if your tenants are paying that for you, right? If your mortgage payment was gonna be $1,200, but today it's $1,400, but you can still rent it for $1,500. Are you telling me that you would not take that deal? But what if I told you that the property is gonna appreciate by another 10, 15, 20% over the next 3 to 5 years? And in addition, you're gonna get monthly cash flow that's gonna increase every single year. In addition, your tenants are gonna be paying down your principal, so they're contributing to your retirement account. In addition, you're gonna have tax benefits and be able to write some stuff off on your taxes and depreciate the property. In addition to the fact that you are hedging inflation because real estate costs go up over time. And you're gonna say no to all of that, potentially tens of thousands of dollars of potential gain because your payment's gonna go up $200 a month. That is called stepping over dollars to pick up pennies. Don't let fear dictate your choice. Let opportunity dictate it instead. Before I move on and share with you the rest of the good stuff in this video, I just want to take a moment and I want to say thank you. I want to say thank you for watching the video. I want to say thank you for coming and hanging out. This channel is all about giving you the stuff that you need in order to make progress in your financial life. For years, we've worked with people who just wanted to get us started in real estate. In fact, when we started the company initially back in casually 2007, officially in 2008, the entire reason we existed was we saw so many people spending money on real estate education, but not actually physically transacting real estate. And we wanted to be that solution. And so this channel is a part of that solution, helping you physically transact real estate so you can actually change your life one property at a time. Now, what we're gonna be doing on this channel is we're gonna share videos about how you can replace your income so that you can create generational wealth, so you could retire early, so you can increase cash flows. So please do us a favor, like the video, subscribe to the channel, share it with any of your friends. It means so much to us, and we're so thankful that you're on this journey with us. Now, are you ready to get back to the spiciness? Because reason number 3 as to why you should not be freaking out when it comes to higher interest is this: rents will be increasing. Now, here's what I mean by this. What we know is that rents take longer to go up than property appreciation will, right? Property appreciation largely reacts to current market conditions, right? What's somebody in the neighborhood willing to buy that home for or that home for? And that could be part of an appraisal comp in the future, which, when you get an appraisal, the appraiser just goes around and they check out how much other homes in the area that are like yours have sold for, and that's called a comparison or comparable. And so you may see real estate becoming more expensive in your neighborhood because everybody's paying a little bit more to get a home. And so all of a sudden you're going on Zillow or Redfin or whatever, and you're seeing your equity increase, but rent doesn't react as quickly as appreciation will. Why? Because in rentals, you have maybe a 12-month contract, maybe a 24-month contract, or maybe a 6-month contract, but rent is locked in for tenants. So if inflation is happening, and that's why we're seeing interest go up and prices are appreciating, but rents are locked in for a certain fixed amount of time, just like your mortgage payment is locked in for at least 30 years, right? Rents are not locked in for 30, but they may be locked in for 12 months, but those rents are locked in. And then when the rental contract gets rewritten, or when somebody moves out and a new tenant moves in, all of a sudden now there's an opportunity for rents to catch up with the market. And so rental prices go up. What we are expecting and what all of the research is saying is that rents are gonna go up year after year for many years to come. Rents generally go up a little bit every year anyway, but they've got to play catch up with inflation. So listen, inflation is up. Okay, that's why interest is up. But we also have seen an increase in appreciation. Well, look, don't step over dollars to pick up pennies, and don't be scared of the interest rate, because the reality is, if you're tired of getting poor returns on your investments, take advantage of the recession that's in front of you, or the opportunity that's in front of you, okay? Take advantage of the scenario that we're facing so that you're not missing out on a whole bunch of opportunity that could be right here for you. So we hope that this was helpful. We want you to know that with real estate, you can overcome a lot of the things that you see when it comes to high interest rates or high inflation. And this gives you an opportunity to combat that. And with real estate, you can achieve awesome returns that happen again and again and again in multiple ways. Our job is to help you see what those returns could be, to look at properties so that you can get a feel for what this is going to do. Our job is to help you play Moneyball real estate and stack micro wins in order to get millions. We want to help you take advantage of the opportunity before you and not be afraid of high interest rates, but understand what's happening and how to take advantage of it. So if you want to get into real estate, but you're worried about high interest, let's jump on a call. Let us explain it to you. Let us show you what the numbers are going to look like, what you can expect properties to do, how rents may potentially increase, and how you can take advantage of that so that you can begin changing your life and replacing your income one property at a time. So make sure you go and click the link in the description, connect with us, schedule a call so we can talk, so that we can help you change your life and begin replacing your income one simple and conservative property at a time. We'll see you real soon.